Hello, everybody. Thank you so much for joining us. It is my pleasure to have three amazing panelists with us today. Sri Jyoti Gadia ji, who is the CEO of Resurgent India, and they have incredible experience in supporting companies of all sizes raise money, figure out their investments, and really from a financial taxation banking side, provide the support that's required. We have Sri M. Kartikeyan ji with us, who's a field manager at India Bank. Indian Bank. We are really happy to have him. And he is the person who's on the ground, years and years of experience. And so we are really looking for some in-depth insights into what happens on a day-to-day basis. And of course, we have Puru Vashishtha with us. Puru, apart from many years being an international hedge fund trader, investor, everything, a couple of years ago started a wonderful company called Wishfin, which is one of India's largest loan originators, apart from a lot of other products and services. But he's also a deep member of the startup community and has done multiple rounds of fundraising. So Puru, thank you very much for coming. We're just going to wait a couple of minutes as all participants join. But I'd just like to set up a quick context here. All of us know that we are not in a degrowth or a recession. We are going through a contraction. Large parts of the economy have disappeared. India went into lockdown all across the board. Every industry, SMEs, MSMEs, and startups are hurting. On one hand, out of the goodness of their heart and after the recommendation and honestly order of some of the governments, we are paying salaries, but there is no revenues. Services are not happening, materials are not moving. And even those companies who would theoretically benefit from this, let's say the e-commerce or health and pharma, are also in trouble because they're only able to provide a very limited service. So in this context, we are going to focus on two parts. One is the debt part, which is going to be our first major coverage. And the second is the equity part as well, to really figure out that in these difficult times, what are the options for SMEs? What are the financing options out there? And how can they, on a very practical basis, not in 3 months, 6 months, 1 year, in the next 30 days, really get access to those credit lines, cash flows to survive the next 3 to 6 months during this lockout period. I request everybody who has joined, there is a Q&A button on your Zoom at the bottom. Please ask all questions there. The entire point is for us to have lots of questions for our esteemed panel here. If you want a specific person to answer a question, please make sure you put that person's name there. And so at least we have that question very directed. Just to kick off things, I'd just like each one of our panelists to just, tell us, how is COVID changing things? How do you see small business, medium business, MSMEs? What's going on? If you can start with Jyoti ji, would you like to give a couple of comments?
Respected Aditya ji, let me first congratulate you for the fantastic work that you have been doing for this last 10, 12 days, and absolutely delighted to work under your leadership, Aditya ji. I welcome other speaker, Mr. Puru, absolutely delighted to have you here. Mr. Kartikeyan ji, one of the finest banker that I've ever come across. One of the banker that whenever you walk into his room, you will always come out with some sort of an answer about it. So this is one of the positive side of the banker, that any banker which take decision, which is also on a positive side. Welcome Kartikeyan ji, welcome Puru.
Thank you.
Thank you.
This is unprecedented time, Aditya ji, and we think that it should be reasonably far bit of time. It should definitely take fair bit of a time just to resume once the lockdown is also over. As you have rightly pointed out, that the major challenge before the MSME or the corporate is how to manage the cash flow during this crisis period. What are the sources for us that we can raise money? I hope government has to seriously intervene in this matter just to bring the wheels of economy back on track. Government has announced several measures till now, that 10% of the extra fund-based limit that we can take, 3 months of deferment is there, but there are some nuisances which are there. I suppose Kartikeyan ji is there to answer and to take care of all these things. And I've been speaking to a lot of NBFCs and fund houses in this last 10, 12 days, because those are the types of people who will come out with different types of a product just to cater to this type of a specific need. And that also we'd like to discuss, that what type of another financial instrument or what sort of innovation that we can think in this financial market that can come up in this next 3-4 months, so that all the MSMEs are also prepared that whenever those financial instruments are getting launched, to whatever the experiences that we have in the past, that when this type of crisis come to, what type of financial instrument would be far more adjusting or far more greater benefit for the MSME. This is there. I suppose there is a lot to be followed, and I am happy to take it thereafter. I now request other panelists to have their opening remarks that way.
Thank you so much, Jyoti. Mr. Kartikeyan, would you like to go next?
Yeah. Thank you, Mr. Aditya ji, for this wonderful opportunity given to interact with all the esteemed panel members here. And yes, very true. The situation is not conducive at all, and we are into a lot of troubled periods. Yes, government definitely has come forward and initiated a lot of good measures. During the discussions, we will also narrate to the members' benefit that what are the measures they have initiated for the common man as well as for the corporate and the MSME clients. Yes, this is a very hour of pain, and we, with all positivity, should be able to come out with a little bit of pain. I only wish that things will get better in the days to come.
Thank you so much, Ji. If I could please move over to Puru, please.
Hi, Aditya. Thanks a lot for organizing this, Aditya, and it's a pleasure to meet the other two panelists. They've already spoken a lot about the situation that we are facing, so I'm not going to kind of talk about that. What I'm going to talk about is, I think we'll have to take a step back. See, financing is just one part of the problem that small businesses are facing as of today. So I believe that as far as short term is concerned, there are only so many things that we can have access to through third-party institutions, whether it is debt funders or equity funders. I think first step would be for all of us to kind of sit back and accept the reality, right? We entrepreneurs, most small businesses by their very nature are a very optimistic bunch, which is great in good times. But this is the time to first accept the current environment and prepare for the worst case scenario. And what I mean by that is, this is the time to kind of bring out, the whiteboard, do all kinds of testing, and based on that, really kind of look into each and every, item on your cash flow statement to really see how you can manage the cash flow. So it's not about getting access to financing, debt or equity. It's about making sure that you are solvent by the end of it, because we know, and Aditya, you know it very well, that given the kind of money that central bankers across the world and in India are putting into the system, 6 months out, 9 months out, we are going to be in an environment where there'll be so much capital available to those who are able to survive next 5 to 6 months. So idea is to kind of look back, look internally, and really kind of rationalize whatever you have with you, which means cost rationalization, which means revisiting all the big cost items that you would have on your cash flow statements, looking out on working capital. How can you extend your how can you improve your working capital cycle, and so on. And once you are able to do that, and you survive, and we'll talk more about it as we go along. I mean, I can go on as far as this is concerned, but very quickly, this is what I would say, that first step will be to look inwards rather than look outwards. And then the next step would be what Mr. Kartikeyan and rest of the panelists we are going to talk about in the next few hours, as to how to get access to institutional funding over the next few months.
Brilliant, Puru. And I think that's a very good takeaway for everybody attending here. Before you seek outside funding, make sure your house is in order. It is always easier to cut costs than to take on expensive funding from outside, whether it's debt and with a higher interest rate, or it is equity where you have to give up part of your company. It is always better if you can first get your house in order, make sure that what can be cut, what hard decisions have to be made, you make them now. And I love this notion that, look, there is a huge amount of quantitative easing sort of happening around the world, walls of money, $2 trillion in the US, the largest fund ever created, 5 times what it was during the financial crisis. And most companies just have to figure out a way to survive the next 3 to 6 months. And then at that point, funding, capital, debt will become a lot easier. Kartikeyan ji, to kick things off, you mentioned that there are a number of schemes the government has taken out, particularly for small businesses. And for the group who are coming in, we are defining small business as a very broad stroke. We are going from people who have 10, 20, 30 lakh in turnover all the way up to around 250 crore, after which then they become a little bit more sizable. And the options there start to change, and we're assuming something like less than 500 employees, but it could be just 2 or 3. So it's a very broad basket of companies. Kartikeyan ji, would love to understand what are some of the options the government has put on the table during these hard times.
Yeah, first thing, Aditya ji, is that major problems which the small businesses face are the repayments. One thing government has come out very clearly is whatever dues that are due during the month of March, April and May, there is a moratorium. They need not pay those dues falling due during this month from 1/3 onwards to 36. That gets automatically shifted to the next 3 months or whatever that time. If it's a term loan, they get that much time extended. And if it is a working capital, they need to pay that after the 3 months moratorium is over. One suggestions are what we represented from the field to the government is that there are so many. In the last 1 week, I have been addressing various customers who are all coming out with a request that even during the month of December, January and February, their repayments which are due, the 90 days over, is falling due in the month of March. There is still not so much clarity on that they have to pay their dues. As per the present guidelines, the norm says that we will have to pay the dues which are due in December, January and February. Only those which are in the month of March, April and May are shifted. So there is some pain points in the customers. We are trying to address them. We are calling them. We have instructed all our branch managers to talk to the customers, make them understand that this is pre-COVID. But representation from the bankers side to the IBA is on. So, but we understand yesterday that there is a direction from the Delhi Supreme Court, Delhi High Court, that no asset should have any slippages. But we have to wait and see for the announcements from the government from that side. As far as our bank is concerned, under the leadership of Padmaja Chunduru, our MD and CEO, our board has formulated schemes which are about 8 in number. One is the corporate for the corporate clients, where for all existing corporate borrowers and medium enterprises facing disruptions in cash flow due to the impact of COVID, to meet the cash flow mismatches being faced by our existing borrowers, we have come out with a maximum 10% existing fund-based and non-fund-based working capital limit subject to a maximum of 100 crores. In case of borrowers who have been sanctioned ad hoc or excess standby line of credit or gold card limits, the total of such limits, including the exposure of the proposed scheme, should be able to be up to 25% of the fund-based and non-fund-based limits. This limit will be over and above the MPBF. And the rate of interest we charge normally is at our 1-year MCLR, which is presently 8.10. This is for the corporate clients. Coming to the major point, Aditya ji, about what your small borrowers are concerned. Again, there to meet the temporary liquidity mismatch due to COVID-19 diseases, 10% fund-based working capital limit subject to maximum of 50 lakhs. And if it is a term loan they want, 10% of the composite term loan facility subject to a maximum of 10 lakhs is provided. And this rate comes at a rate of 8.75, which is fixed. And that door-to-door tenor is about 42 months, which we are giving again a holiday period of 6 months and a repayment period of 36 EMIs. And one thing which we would like to highlight here is There is no processing charges, no documentation, no review charges. So these are the scheme for our end MSME, we call it end MSME, and this is for the small borrowers. Coming to the agro-based industries, there are many, our exposure to agro-based industries is also quite large. To meet again the temporary liquidity mismatches due to the outbreak of COVID-19, our bank has come out with again a term loan of 10% fund-based working capital limit subject to a maximum of 50 lakhs or 10% composite loan with a maximum of 10 lakhs. And here also again we are giving a door-to-door tenure of 42 months and a holiday period of 6 months and 36 EMIs to be paid. So this is for the agro-based processing industries. And we also have some schemes for salaried class, personal loan segments, and most importantly to the poultry segment. Here we understand even the many of the small businesses, there are poultry segment as well, large exposure is there. For those poultry-based units, we have again given a loan we are going to prepare a scheme and we have already launched the scheme, 20% fund-based working capital limit subject to a maximum of 50 lakhs or 10% composite loan with a maximum of 25 lakhs. So this also comes at a interest rate of very competitive interest rate of 8.60%. And again, we give it a door-to-door tenure of 24 months with a holiday period of 6 months and 18 EMIs. And here, all these nevertheless are going without no processing charge at the need of the pain point hour. We don't charge any of these processing charges and review charges and documentation charges.
Kartikeyan, thank you so much. I'm going to come back to you to ask on how does this actually work on the ground, because one of the feedback that we're getting from many SMEs and MSMEs, and I will come back to you on this, is that that this is all very nice. A lot of banks have announced, the government has announced, but they are still struggling to figure out the system. Jyoti, could you come in here? Kartikeyan has described the wonderful stuff that Indian Bank has come out with, right? Are we seeing similar across all banks, many banks?
Sir, I suppose State Bank of India and several other banks has also come up with the same type of a scheme which is there. There are two issues, Kartikeyan, if you can just address those issues for that. What is happening in the non-fund based limit, the LC which has been issued in the month of January or in the month of Feb, which is supposed to come up for us in the month of April or May. Can there be some sort of an interchangeability limit between the fund-based and non-fund-based limit can be thought of by the bank in case if that has not been done for all the EPC contracting companies, for an example, whichever the LC that has been issued. So that is again a lot of problem area for all the people, because that clarity is still, I have not got it from that, and all the bankers whom I speak to, that clarity is not coming in. How the LC due date in the month of April and May, which is coming up, how the bankers are going to view that LC payment, because I don't have the cash flow at that point of time.
Interchangeability of limit is already permitted. There is no...
so it is 100% interchangeability is permitted, sir. It is automatic, sir?
Yes, sir. It is the power lies with the sanctioning authority. So they can go ahead with that. No issues. Already the scheme or the bank's guidelines permits it. Yes, it is a decision case-to-case basis. They have to represent to the bankers.
Aditya ji, sorry, just one more point. What is now happening is that bankers are giving this 3 months deferment of the interest and installment. But if you look at the NBFCs, MSME, there is a lot of loan which they have borrowed from the NBFC. NBFC in turn are not being allowed to defer their installment or their whatever the loan that they have borrowed NBFCs. So they are not allowed this deferment. So NBFCs are compelling their borrowers that you have to pay me on time. So any of the borrowers which has borrowed from banks, we can understand there is a 3 months deferment period which has been given. But what about the borrower which has availed loan from the NBFC, sir? There are approximately around 5 lakh to around 8 lakh crore of loan, which all the small borrowers have taken from the NBFC in the form of a LAP loan or in form of any other loan, Aditya.
Yeah, I think gee, that's two brilliant questions. And one of the things what I'd love to of course focus on. I mean, these are things CIA is taking up with the government,
Absolutely, yes,
obviously. And
Aditya.
Jyoti, you're also leading some of the panels
Correct.
who are
No, we're
taking this up with
definitely
the
taking it
government.
up.
But I'd like to focus a little bit more on the solutions as well, because I think
Correct.
that's what this webinar is really about. Is to give people who are listening in that what they can do. I just want to have a quick conversation on interest rates. Obviously now the RBI has cut its rates down. I think 4 point something percent now, and they're expected to cut it further. Obviously, globally, interest rates have now reached zero. And I'd love to get your perspective, and then Puru. Kartikeyan ji had mentioned that approximately, even for the term loans, working capital, SMEs, it's around 8.7, plus minus
8.1, yeah.
exactly. A little bit up down on that. Is that a good interest rate? What are the interest rates that you're seeing in the market right now?
Just to give you the clarification, Aditya ji, what is happening is that RBI has reduced the repo rate and banks are charging the rate of interest which is linked to MCLR. MCLR, the impact of this repo rate of the coming in this MCLR definitely takes around 6-8 months when the bank's MCLR rate is getting reduced. Thereafter, once the bank MCLR rate is also reduced, whenever there is a reset date with the client, it might be 6 months, it might be 2 a year. Then only that MCLR reduction is getting passed that way. So in case if there are some banks which has, although RBI has reduced the repo rate by 0.75 basis from 0.75 percentage point, bank has only passed on up to the 40 basis point MCLR rate of reduction, which has happened that way. And that to transfer this MCLR to all the MSME, this is where we are requesting all the banks to come forward and don't wait for that reset date to come in, and you should do it right now. So 8.1, Kartikeyan ji, it's a good rate of interest, but I suppose given the prevailing rate, you could definitely reduce, because your present MCLR is now at the present moment is 7.75 if you compare to all the bigger banks.
Yeah.
And the RBI has also come up that way. I suppose there is definitely a scope of around 40 to 50 basis point, whatever the rate that the banks are offering.
I would love to get you in on this. One of the things which I love about Wishfin, and for our audience who haven't used Wishfin, although and mostly focused on personal loans, and since you're talking about SMEs, we find a lot of the SMEs are actually funded through their promoters, who have been taking personal loans to start their companies, who are taking personal loans to do the thing, because, and we are going to talk about documentation, because one of the severe limitations what happens, and we have a couple of questions also. It's very nice if I have a 10-year running history, right? What if my company is 3 years old? What if my company is 1 year old, right? And then suddenly maybe banks will be a little bit more stringent on those companies with very little history, and then that's when promoters might have to actually take the liability on their person. But Puru, interest rates, what are you seeing? Most of us are, have watched the RBI governor out there. We saw this beautiful rate cut. We are hoping for more. US has gone to zero. Other countries have gone to zero. India is still slowly going down. Are you seeing those impacts on interest rates? And what are you seeing in terms of interest rates, both for personal loans, which with good credit, or even if somebody is taking a loan for their business?
So, Aditya, at this point in time, I mean, it's been just a week or so since we had the repo rate cut. And as Mr. Gadia said, most banks have actually reduced their MCLR by 35 basis points, which matters in all kinds of unsecured loans. As far as secured is concerned, most of them actually do not get priced off MCLR. So there will be a slightly more rapid transition of reduction in repo rate in secured loans. So far, most of the banks, they are also frozen, because last leg of dispersal is physical. Bank lending is not a completely digital process. So if a bank cannot send somebody to do in-person verification, or OCV as we call it, it's difficult for banks to disburse loans. Anything on the loan side that will get moving, I think will happen only post some kind of a opening up of the lockdown, or if financial services like loans get included in essential services, so that the bank branch guy can actually go to the customer and get the signature on the wet signature on the loan application form and get the in-person verification done. All kinds of credit checks done. So that's one. Nothing is happening right now. It will happen sometime.
Puru, but that's both for personal loans and business loans.
That's happening for both personal loan as well as small business loans. I'll tell you one thing though. Most of the banks who have existing relationships with the
Exactly.
with the customers, whether it is on the personal side or business side, the turnaround time for those customers, for their own customers, is pretty expedited, and the document requirement is much less. So in case of business loan, if I do not have a relationship with, let's say, Indian bank, Kartikeyan sir will ask me for like 20 documents.
KYC. Yeah.
But if I had an account with him, he would have a better insight into my credit worthiness, even in these times, and he would be more, he would be in a better position to give a better turnaround time for my loan. So that's what we are seeing. Turnaround right now, no disbursal is happening on the personal loan side, barring one or two players who are only disbursing to their existing customers because they are account holders. And turnaround times are going to kind of increase a little bit, at least in the first half. There is definitely a lot of demand in general. And there is a lot of desire from bankers. Bankers are doing whatever they can. In fact, I say that for last 4 years, we've been trying banks to kind of jump digitally, and it's been tough. But these last 10 days have been great from that perspective, because they have themselves reached out to us to kind of come up with a full digital stack. And you will see banks' efficiencies improve as soon as we actually get back to normalcy. So that's what I'm seeing on the rate side. Rates will come down a little bit, but the problem is that I think you will see, at least on the personal loan side, the risk perception will change, and there are a lot of industries, which will find it, whose employees will find it difficult to kind of get loans. So there's going to be a risk tweak that is going to happen. So there will be a reassessment of who they can lend to, where they can lend, and those kind of questions will come in. But nothing before lockdown gets over.
Yeah.
Puru, while I have you here, we have a question from Mr. Nishit Sood, and I would request everybody, if you could please use the Q&A and not the chat to ask questions, because it's always easier for us to look at this. Nishit is making the point right now, and although you did mention, of course, that no one is really dispersing either personal loans or business loans unless they have a pre-existing relationship, because they need a little bit of physical verification. And obviously we are hoping, in the next week, come 15th April, once the formal lockdown is over, we go to a more nuanced lockdown, which will have a lot more services being available. And hopefully the financial service sector will be made a priority sector. A lot of discussions on that internally. But, his point is that, when he's going out and asking banks for a personal loan, he's an SME business person. They are saying, well, no, we can't give you a personal loan because the majority of your income is from your business. You should apply for a business loan. Now, I'd love to get Puru, your thing, and then Kartikeyan, and then Jyoti ji, if you want to step in on that. But Puru, I mean, is this correct, or the bank he's working with is not perhaps the most customer-friendly guys?
Aditya, this is absolutely correct. See, ultimately, from bank's perspective, they have to look at source of income. So if this person is applying for a personal loan and gets some salary from his current company, which he actually promotes or she promotes, then the FOIR will be calculated on the basis of the salary. And there can be exceptions, one-off exceptions here and there, but ultimately the amount of loan disbursed will be somewhat linked to the salary if you're applying for a personal loan. If you're applying for self-employed personal loan, then the company papers and the company, company income, company turnover, and various other factors are like cash flow situation of the company. That becomes the key determinant of the loan.
If I may, sorry, I think the question, what he was being told by the one banker he consulted, that he can't even apply for a personal loan. It has to be in his company's name.
If he doesn't have a salary, he cannot apply for a personal loan.
So if he's only earning dividends, if that's his only source of income, if his company is not paying him a salary,
Yeah.
then he can only. So I think that's a very important point. Is that for all SMEs whose owners are not paying themselves a salary or don't have a record of paying a salary, and are only taking dividends, then it's very hard for a bank to give you a personal loan. Because they see no history of your getting a salary, and they would prefer then to lend based on your company's credit worth and credibility, because they see some collateral, some financial safety there. I think that's
Aditya, I'll make one more point here, if
Please.
you allow me to. The other way to access credit right now for a person like that, for a small business owner like that, is through fixed deposits. Right, loan against fixed deposit will be a great way for someone who is not able to get personal loan. Because this person, Mr. Sood, just mentioned that he runs a profitable business, in which case I'm assuming that he'll have some capital saved. So you could actually access some kind of financing against fixed deposits and other liquid assets like securities. You have mutual funds, so there can be loan against securities and mutual funds and fixed deposits. So that's something which he can explore other than the personal.
Well, I'd love to have a quick 3-4 minute conversation on this, because I think it's very important. And Jyoti ji, I'd love to get you next, but just to be on Puru for a few minutes, what are some of the assets people can take loans against? You have mentioned fixed deposits, right? Are there any other assets which it's easy to say, okay, I have this collateral? Obviously, you have like plant, machinery, real estate. We can't do that right now because physical verification and all is not happening. What are some of the existing assets either a business or an individual can say, I can pledge these to take a quick loan?
So there are 3 or 4 quick things, right? I mean, all the financial assets that you could have, whether it is shares, which is publicly traded shares, because private, again, you run into the same problem. Private shares, you again run into the same problem of valuation, which needs physical verification and so on. Mutual funds and fixed deposits would be 3 assets that I would say will be easiest to get loan against, right? Other than that, you will have gold and all kinds of loan against property and other secured loans. But I think even for gold and for secured assets, I think we'll have to kind of wait for this lockdown to get over. But once it's over, I think those are the asset classes against which you could very quickly get loans, particularly gold.
Kartikeyan ji, you had a point here?
Yeah, LIC policies is one. Just to substitute what Mr. Puru says, LIC policies against which we give loans. And as Mr. Sood says, he's a businessman with a profit. He might have invested in the sovereign gold bonds. Banks are ready to give loans on NSC, National Saving Certificates, and as well as sovereign gold bonds as well. So that's our very handy assets available for the businessman to lay hands on. And as Puru says, this well loan is also very famous, very popular in the banking segment. There are loans for agriculturists on jewels and traders and MSME. Those clients can source the banks with the gold for getting. It's a very 70% of the value of the gold we are giving mostly, and some 5 to 10% depending upon the branch bank. They discount for the making charges, and we get a decent sum there, and it is fast.
Aditya ji, just to understand that bankers definitely look at two different things before giving a loan. One is intention to pay, another is the ability to pay. How my intention can be defined? How my intention can be defined? My intention can be defined that I'm offering you collateral in the form of shares, or I have a good track record. This is how my intention can be defined. The another important thing is my capability to pay, that how I'm going to repay the loan, because banks are not like a typical money lender that they will take on the charge of the asset and without being the capability. In case if I have an answer to this 2 questions, I suppose the loan will be easily available. Whenever we are applying, whenever we are thinking of a loan, just answer this 2 simple question. How will I answer the question, my intention and my capability? These 2 words, if I can answer it, I suppose the loan is there with us. Something or the other is the product.
Mr. Puru had said, already, as he says rightly, all existing clientele there will not be any issues, sir. We know them. We have their full records with us. See, for example, our bank has come with an emergency salary loan where permanent employees of government, boards, endowments, MNCs, reputed companies, who are all existing salary loan borrowers for meeting their unforeseen expenses due to COVID, we give a medium-term loan 20 times of the latest monthly gross salary income subject to maximum of 2 lakhs. And 36 months repayment is period is given and a 6 month holiday period is given. So existing, I don't think there will be any issues at all for them, and it will be easy for them to avail these facilities.
But the problem is, sir, how are the new borrowers, sir? There are some
that is a big thing.
Absolutely.
That is, I think that is the big question, right?
Correct.
I'm seeing a lot of the questions and that are being asked, and I think a lot of businesses were profitable. They were doing well. They never needed to borrow.
Absolutely.
They never wanted to borrow, right? They were doing internal accrual. Then it's only because of this sudden hit that now they're saying, okay, maybe I need to borrow. And I think part of the issue is that a lot of people are doing this for the first time. They've never even filled out a loan document. They've been very responsible businesses. They have never taken anybody's money. They have always lived within their means. They have grown slowly and steadily, and that's to be commended. And now suddenly they find themselves in a lurch because they have to suddenly get at least some funding for the next 3 to 4 months.
Very true.
Kartikeyan, what can they do?
No, Aditya, the point is all these business entities who have not borrowed any amounts will have a current account with their respective bankers. So the bankers will be very, as Mr. Gadia says, if the intentions are very true to pay and at this hour of pain, they should go take up an application with them. And I don't think there will be any, if they have been maintaining their current accounts for a long time with their existing bankers, they should have their current accounts. So they are not new. They are banking with any bankers, but they may not have a liability with them. That's it. Otherwise, we will definitely honor their requests.
So let me distill this, right? So what we are saying here is that companies today who have at least a little bit of track record, right? Who have a current account with the bank, they, the bank knows, they've seen the credits, they've seen the debits, they're able to see that, and they're seeing that this is a good normal business. They are showing even within the bank account a little bit of surpluses here and there. They should be able to approach their current bank. And I'm just going to summarize the couple of options that we've discussed. One is take a working capital loan, right?
Absolutely.
Second is taking a term loan, right? Third is taking a payroll loan. Now, presumably, if you have been paying your people from your current account, you will be able to demonstrate that this is my payroll cost and X times that amount, you should be able to take a loan. If over years you have any investments or savings or assets that the business as part of your treasury management has done, you have taken those as well. The banks, everybody feels, would be very comfortable using that as a security deposit to prove the intent to pay. As Jyoti has said, even if you feel very comfortable paying this, right? Have we missed any crucial type of loan that is easily accessible to people who are borrowing for the first time?
So there are 2-3 points, Aditya ji. One is that government definitely has a very, very good scheme which we called as a without collateral free loan, which is up to 2 crore of rupees that any of the businessman can borrow under the CGT MSC scheme, which is there. The another important funding that any of the new businessmen or the first time borrower can look at, which we call as a transaction based funding. In the transaction based funding, what are the instruments that we can discuss? It is an invoice based discounting. It can be either your supplier bill discounting, or it can be your purchase bill discounting. It can be warehousing receipt discounting. It can be against a particular stock. It can be against a particular machinery. So whenever you have to clearly demonstrate that this invoice that I'm going to receive another 3 months of time, and this is the track record of this party paying me, and this is the quality of the invoice which is being there. So this is the type of a transaction based. If you can just highlight one of the transaction instead of explaining the entire business to the to any of the banker, or that way you can just explain the entire transaction to a banker and you can raise money against that particular transaction. This is one idea that is there. Another important instrument which none of the businessmen actually accrue, which is absolutely prevalent in India, which we call again the credit insurance money. For all the daters, there are 3-4 insurance companies in India, which is, I can even name them, and we can definitely try and see that. There is a credit insurance also, which is available against those daters. We can take a credit insurance, and then we can also go and approach to a lender against that, which we call as a credit insurance backed product also, that is
Jyoti,
factoring.
So quick thing, I am going to let's spend some time on this. I think this is very important. But everybody, everything we are discussing, the names of these insurance companies, any the details. I'm going to request the panelists to please send it out. We have a Telegram channel. I will be posting the link to that Telegram channel. This is the official CIA Telegram channel, which is, however, open to all of the public, and I will paste that link to that. And we will, after this session, we will be also posting the entire session online as well as we go through it. That might take a few days, but I will send that link out before we end. So just the first one on the government 2 crore. If I am an MSME today and I'd like to go for that scheme, how do I apply? How long does it take?
Sir, I suppose there are 4 or 5 basic documents, if you can be just handy with you, which is the audited balance sheet, whatever is the last year audited balance sheet, or this year unaudited result, if it can be handy with you, KYC document of yours, end use of the fund, which is how are you going to utilize the fund, where are the fund getting utilized. Another is some sort of a projection for 1-2 years, that what is the projections that you think that your business can be there. And lastly, if you can give some sort of a security detail, if whatever is available. These are the 5 basic documents, I suppose, one need to be handy before even approaching any of the bankers.
Now,
just one supplement to that.
Yes, correct.
Aditya, can I?
Please go ahead.
Those people who are new to this type of lendings, there is a government has introduced one more beautiful platform, which is PSB 59 minutes. It is a beautiful tool where they need to just log into all these details, and along with that GST return numbers. And once that is and their IT returns are all uploaded, and the customer intended borrower names the branch or the bank, it goes to that branch specific. It is being monitored at the highest level, and all the days on screening, it is totally system driven, and we get a call immediately from the bank officials, and they evaluate it, and within a very fairly reasonable period of time, they are able to clear those facilities, and it is being monitored good at the highest level.
How much time is that normally?
No, see, once all the paper, as Mr. Jyoti says, all the papers are in place, probably within a period of about say a couple of weeks, the thing should have been, if all the records are there and the unit inspections are made, within 15 days, there are guys who are able to get it in weeks time. But if the papers are submitted to be a longer time, it goes even much longer. But
so
100 days is fair enough.
What I'm going to request is, if you can send all these website links, we will put them on the Telegram panel. I am seeing in some of the comments to us that people have tried some of this and very mixed experiences. Some have had success. Some have to be very.
I'll add one more resource, particularly for young startups. SIDBI has come out with something they're calling as Corporate Startup Assistance Scheme, wherein you can avail, I think, up to 2 crores of working capital term loan, payable over 36 months with 12-month moratorium. And it's available at 5%. Sure, there are certain stringent requirements in terms of eligibility, but at least for a lot of new age startups, some of the requirements are very easy to kind of meet. And this could be a nice, complementary working capital loan to all their other resources. I think the turnover requirement for this particular loan is that you should, in last 2 years, you should be between 10 crores and I'm not sure. I think what's between 10 and 60 crores of turnover, annual revenue.
So that's a very good option, and 5% is the best rate we've heard throughout the webinar so far. Puru, I will come back, grab the link from you. We will post these links up so that people have. But it's very heartening to see that there are various options. Now, obviously, all these options depend on an individual person's context and how they're going. Just given to the paucity of time, I am going to sort of look at two more subjects we haven't crossed. One, we have a lot of questions coming in as well, really looking at the rupee dollar contracts. I think one of the biggest things that we are seeing that a lot of SMEs are either service businesses which are exporting services abroad or exporting goods, whether it's large or small as well. And I think this is something that we're all worried. There's a lot of confusion here. Some people are saying, look, oil has fallen by so much, therefore, this year we will run a trade surplus. Other people are saying, look, the rupee is going to weaken because flight to safer currencies. Would just love to get each one of your thoughts. Where do you see the rupee next 60 days? And then where do you think it'll land at by the end of the month? And what are some of the things that people who have foreign exchange exposure, whether it could be tourism and travel companies, whether it could be forward contracts of booking dollars for export, it could be hedge. Would love to have a quick 10-minute conversation on that. Starting with Puru, what's your crystal balling on this? Oh, and everybody, please note, this is pure crystal balling. This is not professional advice. Please do not write letters to any of our panelists that based on your advice, I made an investment in the currencies. This is pure crystal balling. Tomorrow morning, a new notice can come from the RBI or from the government and change absolutely everything. So on a pure, no harm, no foul crystal ball, where you're thinking this is going?
So Aditya, I'll start with a very simple framework for this, which is that, all currencies across the world are going to weaken against dollar. Dollar is going to become stronger and stronger, despite crazy amounts of printing. Reason for that is it is one of the very few asset classes which everybody desires and which has value. It has store of, people will continue to use it as store. So dollar is going to get strengthened. Currencies across the world are going to get weakened against dollar. INR will also weaken against dollar, but across all markets in India, equity markets, debt markets, if there is one market in which where I feel that there will be least amount of volatility, I feel that will be in dollar rupee. And the reason for that is very, very simple. Terms of trade are obviously, getting tilted in favor of India. Oil being a big factor, oil prices have really collapsed. Not just oil, commodity prices have collapsed. So some of the big items on your balance of payments, on your trade accounts, are actually turning in your favor. So on the current account, exports were already very weak for India for last many years. And the kind of things that India exports anyway are very sticky, whether it is pharma, IT is going to, there might be a small, very short-term slowdown here and there, but ultimately it will come back because it's cost saving and the world is going to look at cost saving left, right, and center. We saw it in 2008. Remittances will slow down a little bit, but debt flows and overall capital flows will actually pick up just because of the kind of liquidity there is in global markets. So on the whole, I believe that dollar rupee, the flows are in favor of dollar rupee in terms of strength. I think rupee will still depreciate, but at a much slower pace. Finally, I think that of all the policy measures that RBI has, dollar rupee is one of the very few very few assets on which RBI has a lot more degree of freedom. RBI has massive foreign currency reserves that it can use, and not just the foreign currency reserves in spot market. It has the ability to kind of partner with any of the central banks across the world to get like special lines on the forward side. So I think that rupee should be, I don't see rupee going to 80 or 85. I see rupee, moving around this whole, 74 to 77, 78 corridor for most part. And I will be surprised if it goes to 78 actually.
Fair enough, Puru. And I am going to come back on saying that if we are looking at this sort of low volatility, can some of our little bit more sophisticated small and medium businesses that don't have to be large, but will there be an opportunity to actually access ECBs and external dollar borrowings? Because at 0% interest rate across the world on a dollar denominated terms. But I'll come back to that. I still want to look at the rupee volatility there. Kartikeyan ji, any
Yeah.
thoughts on this?
Yeah. See, rupee is definitely going to be weakened in the days to come. But as Puru says, RBI will definitely not allow things to go overboard. So they have so many instruments for them, and I think they will not. I think I'll go with Mr. Puru's version. And one thing, a small advice or something of suggestion will be to the exporters and importers. They have to hedge. Most of the clients, whenever I interact with them, when I start asking them to hedge, but they are still, there is a reluctance on their part to come for hedging. They say that is an unnecessary cost I have to pay. But now we seeing the volatility, we need to understand the so many disruptions in the business. So it is better to go for hedging.
So I think that's good advice. And we have a specific question on a hedge. I mean, we have somebody who has booked a dollar at 72, but due to the COVID disruption, they were unable to deliver during this time. Is there options to extend that hedge? I mean, are hedging coming under this 3-month moratorium or LC extension, or that has expired and they've lost that hedge?
No, they have this. They have to be in touch with their treasury. There are instruments available for extensions. I think the concerned person has to take up with the treasury of the bank concerned.
So I will add to what Kartikeyan sir is saying, Aditya. What he's talking about is probably rolling over. So he can roll over, but if the option of future contract has already expired, I don't think so that the guidelines that Ministry of Finance came out with mention any extension of the contract deadlines for forward contracts, because those markets were open all throughout. There was no disruption in those markets.
There was no disruption, and so theoretically, someone could have rebooked it if they felt that they were going to some volatility. Jyoti ji, so 2 questions: one, dollar rupee, and of course, viability of smaller companies to go and look at external borrowings. We've seen large companies do this all the time, and some of them, of course, have done it well. Others have gotten into various trouble as the rupee and the dollars have moved. Your thoughts on the rupee and dollar, and of course, can startups, small companies access foreign debt markets? I mean, is it easy? Is it hard? What size do you have to be before it starts to make sense?
For the first question, for the rupee dollar, although I'm not a very expert in this, but there are 2-3 things that I know from a common man perspective. First of all, as a country, I can understand that in this last 2 weeks, whenever I'm interacting to all the RBI person or all the banking person, that as a country, we are not impacted on that disaster level, although the things might have come to a halt, but as compared to the other countries, the things we have itni kharab nahi hui hai cheez hai yahan pe. It has just come to a halt. We might restart the engine, and whatever the restarting engine time that can take, it might take from 1 month to 6 months time. The restarting of engine can take place. So we are not that bad in terms of this epidemic, whatever that we are speaking. The second, India, there is a deficit of the balance of trade, and with the dollar and with this oil prices coming down, we should definitely have the balance of improvement. India being a domestic consumption country, so there is not so much of which is the USD, and also the people are boycotting some of the Chinese companies and something. And whatever that I could understand is that a lot of American and the European companies, they are going to start putting up shops here in India and start buying from India itself. So a lot of foreign currency is going to come back to India itself, if you can talk about from that perspective. I don't think that there should be so much pressure on the dollar buying from India that way. So as Puru has rightly pointed out, that it should hover about within a range. So my general perception is also there, because agriculture is good this time, monsoon is good. We are not so much devastatingly impacted also. The oil prices has come down. So everything seems to be in favor of whatever the dollar prices is there. And with so much of liquidity coming in, and India being this center stage at this point of time, so the money will come in. The second question was that whether the smaller companies will be able to raise ECBs or not. For raising ECBs, first of all, two things are important. One is because other countries or the other bankers or the countries that doesn't understand what is my financials or anything, they go with the country rating and they go with the company rating. This is the first barometer. एक एडमिशन फॉर्म जिसको मिलता है ना आदित्य जी की, आदित्य की हमको स्कूल में जाके दाखिला के लिए हमको एडमिशन फॉर्म मिलना पड़ता है. So these are the two basic criteria for this admission form to get entry into it. Our country rating is, unfortunately, it is just an investment grade. It is not, we are not among the A-rated countries, which is there. And with the startup companies and with the MSME coming in, and they are not among the AAA country there. So country की rating है the BBB and the company rating is also BBB. So BBB multiply तो वो below investment grade, then it comes down to. So if my country rating is BBB and my company rating is AAA, then only I can be an investment grade in the eyes of a foreign borrower, which is there. What has now also started happening now since the Insolvency Act has come in, so whatever the foreign borrowers or the foreign bankers, whatever the money that they have lended in, so the recovery mechanism in India was not pretty much so much of a stronger mechanism that is there. So whatever, and plus they think that if they can lend to all the banks, because all the banks of the HDFCs of the world and all the Indian banks, State Bank of India, they go and raise money. All the NTPCs and all the good companies are raising money overseas market. So whatever is their Indian kitty, those are getting filled up by all the banks and the bigger companies there per se as such. And now this, the NBFCs are also allowed to access the ECB funding. And you can see that apart from 2 or 3 NBFCs for this last 1 year, none of the NBFCs has been able to raise the ECB funding. Real estate companies, all the infra project has been allowed to raise the ECB funding. But for this last 1 year, whatever the ECB funding that has come in, it has been coming wherever there is a sovereign guarantee which is being involved. Apart from any of the sovereign guarantee involved, or apart from the AAA rated thing, it is difficult for any of the small and medium scale companies. And I can come back that it doesn't make sense also for them. I can, in case if the time permit, I can explain them that it doesn't make it doesn't make financial merit also in taking the loan. Yeah, 0%, 1%, it might sound exciting, but there are other inherent costs also which are there. In that also we can discuss that.
Or the original, the hedging, the currency risks, all
currency risk and other things, Aditya, right? So which is there.
Going to be a loan.
There is only one foreign product which is absolutely good for any of the MSME companies, which we call as a bias credit. In bias credit, it is based on the guarantees of the Indian bank that they can, whatever the capital goods that you are importing, you can get a foreign currency loan up to 3 years to 5 years. That is the most cheapest route and the most convenient route. If you are importing any of the raw material, you can get the bias credit up to 365 days. So these are the two, definitely these are the bias credit route is one of the best route for any of the smaller companies to raise the foreign currency loan. Apart from raising and going money, first of all, it's a wish list, they will not get it. And in case if they can get it, the spread that they are asking, it doesn't make sense for them to raise money.
I look at 2 points in this. One is obviously the implied walls are very high. So the cost of hedging is going to be actually more than what it was 3 months ago as well. Right? Even though the actual price is pretty restricted and not volatile, but implied walls will be high because they are sentiment driven. Number one. Number two, the way they can actually access some kind of foreign funding, it won't be direct. The waterfall will be banks and NBFCs. They are the ones who are like, as Jyoti ji said, that it's really the tier 1 companies which are going to have access to any kind of foreign capital. And even they will not have that kind of arbitrage that we have in our mind that, okay, 0% interest rate and like so on and so forth. So ultimately the waterfall will be that money will come, they will be able to access ECB markets, and through them, you will be able to kind of get it through through regular lending and not necessarily directly. I'm talking about MSME.
So what I'm hearing though, I think this is a big thing for all SMEs and AMSMEs out there. I think trade finance seems to be a great way for you to look at some borrowing, whether it is buyer credit, whether it is invoice discounting or letters of credit or foreign credit and such. And whether it's using an Indian bank, there are options, perhaps even if you have a regular standard supplier around the world, their bank may able to, based on their balance sheet, be able to advance some credit as well. And so I think one of the easiest ones for those who are doing regular business, particularly who are importing and exporting, is to really talk to your bankers, talk to your people on what are the trade finance options that may be available to you if you're not fully using them right now. Now, in the interest of time, we have about 15, 20 minutes left. I want to move to the equity part. And although that's going to be a very small section since we had focused a lot on debt, one of the things that a lot of people are saying is that, okay, look, debt markets are dried up. Is there even an option for equity? Now, to put this into context, India went through a startup, angel investing, PE and all boom. Starting 5 years old, and now it's sort of, I think even the last couple of years, most people will agree that has slowed down considerably compared to the heydays of what it was. And so I'd love to get a sense from each one of you. A, what's the market for equity raising? And B, if somebody needs to raise equity, and keep in mind, this does take a long process. You can't get an equity thing in 15 days, 30 days. But if they start now, and presumably hit the market in 2 months, 3 months, 5 months, 6 months, what are their actual options? Kartikeyan, starting with you, would you like to comment on advice for equity raising?
Personally, I think I'm not I'm more confident on the debt side. So I would rather...
I'll punt it to Jyoti ji first, and I'm saving Puru for last because
he is an expert. He can definitely come and he can definitely back it up later. Just to give you the perspective of the Aditya ji about the equity market, that first of all, the household saving in India, if you speak about how the household saving is getting distributed in the various asset classes, only 2% of the household saving in India goes to an equity asset class, and which is lowest in the world. And on an average, 25% of the household saving, if you compare to the European markets and also the American market, 25% of the household saving goes into the equity market. So Indians by nature are very, very conservative in nature. So that is where the equity, there is no depth in the equity market also per se in India. So whatever the startup funding that we have seen, it is all institutionalized based startup funding, which is being whatever that channelized there. Individual
PEs, all of those people,
all those P's and all those angel investors, all those institutional type of frame of money, till the time of me, you, Puru, Kartikeyan, we start putting our small saving into the equity market, till the time the equity market is not going to see that much turnaround market. Why it is so also? Because for an individual like me, I have to pay around 32% tax, and thereafter whatever the money, if I have earned 100 rupees, after paying the tax, I'm remaining with around 70% of that money. Now that 70% is after hard-earned money and after paying all the taxes and everything. In European and the American market, if you are investing in an equity market, it is a tax deductible item. It means if you are investing 100 rupees, it gets deducted from your income. Whereas in India, if you are investing in an equity market, you have to first pay tax out of your income. Then whatever is the income remaining, that only you put a risk into that equity market. So that so the delta is not there for me as an equity investor.
And for example, the UK has this beautiful startup thing that any amount up to a certain
amount that is a tax that is absolutely tax-free amount that you can go and invest.
Any startup or any company and you give to them, you can just deduct it straight from your tax.
एब्सोल्युट। तो आदित्य जी, यदि आप अपना पर्सनल इनकम टैक्स भी देखेंगे, यदि आपको लगता है कि मैंने यदि 100 रुपए यदि आपने कमाया, यदि उसमें यदि 30 रुपए यदि आपने टैक्स दे दिया, तो यू कैन इन्वेस्ट ओनली अप टू दिस 70 रुपीज, वेर इन इफ यू टॉक अबाउट यदि योर टैक्स डिडक्टेबल आइटम यदि होता, तो यू कैन इन्वेस्ट अप टू 100 रुपीज अपफ्रंट देयर एंड यू आल्सो सेव ऑन द टैक्स अमाउंट देयर. So these are the two differentiation factor we need to understand, that why first of all we are conservative in nature, and there is no tax arbitrage also which is incentivize us to go and invest. Giving this context there in the equity market, if you speak about all the private equity players which has started coming in 2001, 2, 3, 4, there is not much exit which were happening in this last 3-4 years. What was we see that there are only few firms or the few private equity invested company which has seen the exit, that they have made some money, although the money is only on the paper that I have made, because there is a subsequent round which is happening in all these startups, and that's where the equity investors just feel pride, because their NAV is only getting increased because their subsequent round of money, that's where the equity value is getting increased. But if you see that how much of them has actually encashed and made money for themselves, that's where the thing is very, very less. So if you leave aside that only 10-12 IPOs which has come in the last 2-3 years, that is why lot of traction which we're seeing it. Now, since the capital market is again doomed, we don't know that how much all the IPO which has been P invested company where they can see an exit. P will only come in if you show him an exit. So whether are our capital markets so efficient enough that we can give them a P investee company an exit? That's where the question lies.
Puru, you've done fundraising for your company, and you have a lot of friends in our common networks who have also looked at this market, and you've seen this. I mean, let's look at the three classic options, right? One, of course, is let's go for VC and all. Are VC putting money in if they are where they are? Is PE, small PE, obviously large PE and there's small PE. Do they exist? You know, a little bit of angels there as well. And third, you know, India has one of the lowest thresholds for IPOs. You know, in terms of you can IPO a company which has a very, very little turnover, and a lot of people do use that thing. Any of these three markets open? And at what discount are people having to raise equity compared to maybe 3 months ago?
So Aditya, I'd like to add one point to Mr. Gadia's analysis. See, Indian retail investor is allowed up to 150,000 rupees worth of investment, which is tax free.
It is only into the only into the listed entity, that is only up to the top 50 companies in India. He was speaking to me about the startup funding.
A startup and SMEs who are not listed.
Which are so this Rajiv Gandhi scheme is not allowed.
Correct. ATC is the scheme. So Aditya, as far as funding market is concerned, institutional funding market is concerned, right now it is absolutely shut down. So if I start with VC, you have to work with the assumption that over the next few months, for maybe 3 to 6 months, it will be tough to kind of get VC's attention. They will talk to you, but everything will take a little longer. Interestingly, in India, most VCs have raised funds recently, so they are sitting on a lot of dry powder. So they have the capability to invest. So you will see a lot of that money coming back, right? But it will take some time. As far as slightly late stage ventures are concerned, which actually raise capital from venture investors outside India, likes of DST and so on. Over there, I feel that we are about 12 to 18 months away from seeing like big checks actually coming back into the market, because the first hole that those guys will try to fill will be in their domestic markets. So a US fund which invests in venture would be actually first looking at opportunities which will be attractive in his domestic market, and then would be looking at India. India is always a spillover market for almost all the large guys. So for Series C, Series D, that is exactly how it is going to pan out. I think in general, everybody should just assume that few things are going to happen. One, it is going to take longer to raise equity capital, either VC or global venture investor. Two, the rounds are going to be, a flat round is like a 40% up round or 100% up round. So valuations are going to correct significantly over next few months. Right now, whatever announcement you are seeing in newspapers about X has raised money and Y has raised money, that is already, those are the people who had already done the deals and are just kind of, the rounds were closed. It's just the announcement which is coming in. So it is a tight equity environment for next 3 to 6 months from global investors' perspective. Interestingly, FIIs have been withdrawing money from local, from Indian markets, basically. Even when the stock market has been going up, FIIs have been withdrawing capital. I don't see FII capital coming back in large hordes pretty quickly. It will still take 3 to 4 months. And therefore, I think it is going to be a weak IPO market. And we've seen like 1 or 2 IPOs which are lined up, even SBI Card's IPO, right? Since the IPO, the price action has been pretty weak. It is one of the most solid companies out there. And there were a lot of other IPOs which were pulled out. So equity financing is going to be very, very tough in this market, and valuations are going to correct. Imagine you could actually, so for example, in FinTech, you could buy Bajaj Finance at 2,000 rupees, which was available for 4,000 rupees 3 months ago. So 50% correction in one of the best,
well-reputed public.
Probably the best company in India, right? And still 50% discount. So what HDFC Bank is, has seen price correction. So, great franchisees are available at 40% discount. So imagine illiquid private companies will also actually go through similar or larger discounts in terms of valuation. So that's really how it is going to play out. I don't see equity financing as a big tool. Aditya, I will like to add 2 more things. I think we are talking about financing from debt and equity side. I think government has done a couple of things. I wish they could do more, and I hope they still do, because we are hearing about another package coming out, which is $14 billion.
Exactly.
But there are two or three things. I think on the payroll side, they have actually given some some relaxation. So I think they are going to contribute 24% of the PF
absolutely, but that is severely limited only to companies under 100 people, and only if 90% of those people are earning less than 15,000. So I think it's a very good scheme for a lot of people to look at, especially if you have a high number of people who are paid minimum wage or below minimum wage. So that is an option, yes.
And the second is what Aditya, we were discussing earlier, which was about payment of dues by the government across, and particularly starting with the income tax refund, the circular that came out for sub 5 crore turnover companies yesterday.
Up to 5 lakhs, they are giving back money that they owe to people. They are just expediting that release. I think those are good small measures. I don't know if it moves the needle for most people. But I have a last question here, and I'm seeing some of the questions in chat. One of the interesting part is that how difficult it is right now to get financing in trade from your both debt and equity from your customers and your suppliers. Let me lay out the thought for everybody, right? So I've seen this anecdotal evidence where you have startups or you have companies or small reach out to their large customers, reach out to their large suppliers and said, look, we are good guys, our track record, our delivery model. We've been able to come back time and time again, even if you've only had a year or two in the market. Can you front us some money? Can we give you a discount on service? Can you take a strategic investment in our company? Because you already know us. You don't have to do the due diligence because you worked with us there. Is this happening? Is this even a reality, or it's such a small case situation? Would any of you like to comment on that?
Yeah. One aspect which I would like to make here, Sadhyaji, is this TREDS platform available, which along with this SIDBI, many of the bankers have joined the TREDS platform. And that is a place, exactly what you just said now, that there are smaller players who are manufacturing to bigger entities. Those bigger entities will be the enrolled into the TREADS platform, and these bills which they have taken a time frame for getting their payments will be discounted in the TREADS platform. Each banker will be a bidder in the platform, and once the bill is raised, all the banks eye for it, and they give the credit to the persons concerned. And at the end of the maturity period, the corporates with whom the TREADS platform is registered, they make the payment to the bankers. This is one avenue already available.
Could you spell the name of this platform? And
TREADS. I will pass on the link to you, Mr.
Please pass it on. And it's live today, correct?
Yes, it is live.
And so going back to the trade finance thing, so I think that's brilliant. And once again, I will post the link to the full recording of this conversation at the end of the webinar, as well as the Telegram channel, where we'll be sharing all these links that we have discussed. So don't worry about it. I think that's a great point. Any other thoughts? Equity, debt from customers, suppliers, people who know you in the ecosystem? Does it actually work? Are you seeing it happening?
Sir, suppose what can happen is, Aditya ji, from a banking perspective, I can answer that in case if you have a long-term contract, we can go and discount this long-term receivables contract from the bank or from the parties itself, and we can give them, although this, right, we can definitely go and discount those contracting terms. So definitely there are schemes which are available, and this would be a brilliant idea. I suppose on the ground, much more need to be done because of enforceability of contracts and other things are also being to be taken into account. Regarding the TREADS platform, which Kartikeyan sir has recently just now pointed out, there is only one issue which is there, that the bigger companies has to come and accept that invoice in that platform. So what we have been doing on behalf of CII is this, sir, in case if the bigger company has taken an input credit of that invoice, then it should be automatically taken as accepted. It should not be coming that the bigger company has to come and again accept the invoice into that trade platform. So this is where we are trying to link. This is absolutely a mission under the GST. In case if you have taken a GST input credit, so it will automatically deem that this invoice has been accepted that way. I suppose DFS has also told us, to all the CI and to me particularly, that they are working on this type of an idea, that how they can make this trade finance much more comfortable and much more easy to use for the people to come and talk about it.
Just to supplement what Mr. Gadia, I can also share with Aditya ji about our bank, which have 14 clients already boarded in the platform. I can share that link also to you. Similarly, all the banks have done.
Correct, sir. This will definitely give it a try, Aditya. And one more thing, sir, on behalf of CII, I would just like to mention that there is a concept of CII Finance Facilitation Center, which is FFC. We will share the link with all the members right now. What is the complaint that we have been getting for last 10 days for all the MSME and the smaller members, that okay, we will not get a new funding, and whatever the announcement that the government has made, whatever the announcement that the banker has made at the head office level, it is not being percolated at the branch level, and all the MSME members are not able to assess that. For that, I request whoever are the members which are present here, and we would also like to circulate everything, that in case if you are not able to get this 10% extra fund based limit, in case if you are not able to get this 3 months deferment, or whatever the loan amount, this PSB loan people are saying, I can see in my chat boxes that they are not happy with that experience. I request you, please use the CII Finance Facilitation Center. It is free for all the members. You will be given a number as soon as you log in there, and definitely we on behalf of CII will try to take up your application. We'll try and try and speak with all the bankers concerned and try and facilitate that you start getting the loan. So please, I request all the members present here, Aditya ji, through you, I would like to pass on this message to everybody, that all the members, whichever are posing so much of problem areas, that start using the CIFFC platform, which is free of cost to all the members, and we will try and resolve their issue to the maximum thing possible.
I am very grateful for that. I have posted both the links, one the Telegram channel where we'll be updating all the links that have been shared today, so you all can access it. I've also shared the link to the complete list of CII webinars. We have a very long list covering multiple sectors with brilliant panels, and we're adding more of them every day. But it's also a place where if you're not a CII member, please become a member. CII has this brilliant facilitation cell. Jyoti ji has given an open offer for all members to please come, tell the problems, and CII will
take
work
it up. Absolutely.
to facilitate with the bank. Sometimes it's just connecting the dots between a head office and a branch, and often a few phone calls can go a long way in making sure that we can make up for the communication issues that are happening. So please do use that link to join CII. Obviously, this is only open to
CII members.
You have to join first, but the application is very fast.
And Aditya, you just wanted to mention that last year we have helped around 778 crores of disbursement through this FFC cell. So this is the type of the impact that we created, because those individual small MSME member, it is difficult for them to go and speak to all the higher authorities or to the banker per se as such. But on behalf of CII, if you go and speak about that on behalf of industry association, if you take appointment with any banker and go and discuss our members' issue, the chances are there that we might be better heard of our issues there.
Brilliantly, thank you. We are out of time.
Just one point, Mr. Aditya.
Please, Kartikeyan, tell me. Yes.
One thing which I would like to stress upon here to our MSME friends are this restructuring. There is an inertia whenever I contact the borrowers to ask them for restructuring coming forward. They are saying, no, I don't require, my CIBIL will get spoiled. But government has come out and banks have come out with the restructuring. All those standard accounts as on 1st of January 2020, they are eligible for restructuring. And that is now extended up to, which was supposed to close on 31/3, the government has extended up to 31/12. But I see whenever our bank managers are going there, but they say, no, for 3 months, 4 months, I require some, otherwise after 6 months, we will be able to get the cash flow in order and I will able to
Aditya, it's a fabulous idea. We should definitely do one webinar on this restructuring and how this stress management can be done.
Exactly. See what even from up to 5 years to 10 years, we can go for restructuring. Very good avenue available. But borrowers are having an apprehension that if we go for a longer, their reputational credit risk will be on the higher side. It's not like that. In fact, we
can definitely resolve all these queries of the members. Sir.
No, so yes. I think this is a great idea, and I think we should have a workshop on this restructuring options.
Restructuring option, that is absolutely.
The entire system will go through in the next 2-3 months. We will see more and more people not only eligible, but who will really benefit from that. On that note, I'd love to close the webinar. Thank you so much to all of our panelists for sparing the time. My deep apologies to all the attendees whose questions we could not take. I know a lot of you are going through a lot of pain, but please, I would like to end on a very simple thing. Ask for help. This is the one time I know SME startups, founders, CEOs, people who've done this first time or have done this for many years. You are the pillars of your community. You are used to other people coming to you for help, your employees, your family, your friends, the people around you. Very few times that you are in a position where you have to ask. This is not a time to have pride. This is not a time to feel something is below your dignity. If you're in trouble, ask for help. Ask your suppliers, ask your clients, ask your bankers, ask your family members, friends. This is the time to go all out and figure out a way to survive. Everybody here has agreed that, look, honestly, this is a 3 to 6 month phenomenon. We have to just figure out a way to survive for this next 6 months, 1 year, until the engine is restarted, until the huge amount of financial support governments across the world are giving will finally come to bear, and that will make it a lot easier for people to survive, but also to start to thrive again. So please ask for help. Thank you very much for attending. I have posted the link to all our CII webinars. They're open to the public during this entire time of COVID-19. If you would like to join CII, please do join. We have posted the membership link there. And not only the resources that Jyoti ji has said, there are a lot of resources in CIA, both at the state, at the national level, which are working in really helping member companies through these difficult times. Thank you so much, everybody. And hopefully we will follow up with another more specific webinar addressing things like restructuring and some of the more simple questions that have been asked during this time. Thank you. Have a great evening, and Jai Hind.
Thank you. Jai Hind.